While personally and financially devastating to homeowners, the LA fires, which include the Eaton fire and several other wildfires, are likely to place added stress on the state's already fragile insurance market. Experts and lawmakers say it's an issue that extends beyond California, with similar issues facing homeowners in Florida, Louisiana, and other states. Told you about Florida. And mind you, we're still dealing with, when I say we as far as the country, we're still dealing with the ramifications. Shout out to FEMA not having no money, but the ramifications of the hurricanes that hit a couple months ago before the election during hurricane season, was that October, September, October timeframe. Like it's just insane. And that's why you see so many people complaining about, what we're spending money on as a country in short. And it's like, hey, we got natural disasters that we deal with on a yearly basis in short that apparently y'all telling us we don't have money for. All right. We'll be watching to see whether the collapse of a trembling, home insurance market accelerates after this added shock. Yes, it will be interesting to see if insurance companies will ramp up how much they're deciding to pull out, deciding to pull out of California. Please pull out of California. Do not impregnate California, anyways, because they're just gonna board it anyways. They don't board it anyway. Ooh, that joke was just sitting right there. Pull out of California if you want to. It don't matter because they're gonna abort it. Um, Senator Sheldon Whitehouse, can't tell this is okay. A Democrat from Rhode Island wrote on X, formerly known as Twitter, Thursday. Oh, excuse me, y'all. Is that guy punished me about that karma about the abortion joke in California? Whitehouse serves on the His name is Whitehouse, and anyways, Whitehouse serves on the Senate Budget Committee, which last month issued a report about climate change's impact on insurance. Okay, shout out to climate change. Representative Maxine Water, right? She's a Democrat representative for Cali, one of them. Okay, she's part of the LA. Part of her district is LA district. She'll looking to reintroduce a bill called the Wildfire Insurance Coverage Study Act. Do I really want to read anything past that? This would require a government accountability office to analyze the dangers posed by wildfires to communities and how home insurance companies are responding. Nigga, what? It's a fire. Are they insuring it or not? Like, what are we talking about now? If you want to assess like areas that are sort of like how they have flood zones, like if you want to have fire zones, cool, but maybe that's what part of this is. Tell you I'll be doing this VA research. I'll be telling you I'll be helping veterans out here getting the rating that they are entitled to by law, that they deserve and they earn. See the DAV ad. Anyways, it will help us determine the best federal response is to these issues. That's what Maxine Waters is saying. We need to know more about climate change. Sure. Determining which areas or types of vegetation are more susceptible to wildfires and the risk of building in those areas. It's 2025. To my knowledge, is no like new Earth, at least like where the United States is at, and in California in particular. So like we should already know like what's more flammable and not. Long story short, all of California is again that big satanic pull over there. Ooh, when I say burn it all, like there's so much wild stuff going on over there. All right. Maxine Waters added that higher risks are leaving homeowners and business owners and families without insurance coverage because some of the insurance companies are canceling. They are, aren't writing any new insurance. They are not writing any. They aren't writing any new insurance. Typo there, y'all. People continue to pay higher prices for even less coverage. That is the main issue people have at home with insurance in general, paying more money for less coverage or just paying money for coverage and you're not even using it. But hey, that's insurance. So it's definitely going to be interesting to see how this all plays out in the coming weeks. Obviously, President-elect Trump is getting in office this upcoming Monday, so it'll be interesting to see how these things kind of unfold. So many things have happened since President-elect Trump has been elected. Like it's just been so many things. Like, he's not even president yet, and there's just all these new things. Remember the possibility of World War III? President Biden allowing Ukraine to use the longer range missiles. That was after Trump got elected. Like, there's just so many things that go on. My goodness. And that's why it's like, can we stop helping other people and just like focus on the shit that we got on going on over here? Because it shit don't stop, man. It's crazy. With the fires continuing to rage across LA, area. The estimated cost of the disaster is surging. Potential property damage, economic losses could amount to as much as 150 billion. So again, in that particular area, they were talking about with the 9,000 homes at being at roughly the median of 3.1 million, being 27, roughly 30 billion in real estate. They're talking about 150 billion in damages. That's according to AccuWeather. And again, how can you, I say be mad, but if the insurance company has to pay out, $150 billion between these insurance companies, how could they not raise the premiums? Not when I say they're entitled to do it, it's just, but hey, we just spent $150 billion and need this money back, right? Oh, excuse me for scratching my nose on camera. That's so nasty and rude. Anyways, that would make these wildfires, the most destructive in history. In California, State Farm last year said it was discontinuing coverage for 72,000 houses and apartments, and even the apartments can't get insurance. Oh, Lord. Since 2019, more than 100,000 Californians have lost their insurance, according to the San Francisco Chronicle analysis of insurance data. That's a lot. Excuse me. Sounds like State Farm the biggest provider of insurance in California? I don't know. Full-scale financial crisis with climate disasters increasing in frequency. The insurance industry is grappling with the new calculus amid rising costs and risks. That's prompting some insurers to decide not to renew insurance policies in counties that are more at risk for climate risks. I mean, speaking of the VA, you can't get a VA loan if it's in a flood zone. Like the VA will not insure it. Not sure. They will not allow issue you a loan for that house. So it's understandable to have these type of restrictions, but when it's something like your house where you're here like as if you directly control the fact that now you're living in a fire zone, and sure, like not a flood zone but a fire zone, I could imagine just how disgruntled these homeowners are, especially you got a $3.1 million home. But where these areas at in California, it might just be a regular home, right? It's the cost of doing business there. And it's saying it's not only within California and the other usual suspects the Senate report found, as far as people not having the insurance companies are not renewing the policies. The data confirm that it is climate change that is driving increasing non-renewal rates. It noted second, the data revealed that Florida, Louisiana, California, and Texas are not the only places experiencing spiking non-renewal rates and increasing premiums. Other regions facing rising non-renewal rates are Southern New England, Carolina. So New England, I guess, is due to snow. Southern New England, that'd be like Southern New England. I guess that's Connecticut, Rhode Island. Carolinas, again, we just talk about the storms there, New Mexico, and counties in the northern Rockies. So Oklahoma and Hawaii. Oh, shout out to Hawaii. Everything's expensive in Hawaii, though. The issue just isn't local. This is predicted to cascade into plunging property values in communities where insurance becomes impossible to find. Yes, good point there, right? So it's going to be hard to insure these houses, and so short, if people want to get out the houses, they have to lower the price so people can take that increased insurance hit in their mortgage payment. Again, your mortgage payment is generally principal, interest, taxes, and insurance. That last letter there, the insurance. So in short, people are going to lower the house price so they can sell the house and move somewhere they want to move. But it's so that the buyer of the house is like, hey, we need this mortgage price to go down as far as the cost of the home so that we can take the increased insurance hit. Well, it looks like we got to wrap up soon because I'm running out of water. And I'm just getting back in the gym, so I'm like unnecessarily dehydrated. This is predicted to cascade or plunging property values where it's possible to get this insurance. A collapse in property values with the potential to trigger a full-scale financial crisis similar to what occurred in 2008. Not wrong about that as far as the theory.
So what are you thinking?
I'm thinking.
We don't care what y'all thinking. Anyways, my bad, y'all. Here's how it works. Climate change makes risk unpredictable. Sure. Then how do you know it's climate change if it's unpredictable? What? Risk makes insurance unaffordable. or unavailable. No insurance makes mortgages unavailable. Without mortgages, property values crash, cascading like 2008 into general economy. Whitehouse, when I say Whitehouse, it's the Senator Whitehouse wrote Thursday on X. So this is the fair plan that California is offering. Ooh, California and their offerings. Still, they look like they're being a sacrificial offer. Anyways, still, there's some potential for near-term relief. Homeowners in California can get help from a new state regulation. How are they paying for this regulation though intact? Like, what? I think, and being that I'm a LA, formerly San Diego Chargers, but now LA Chargers fan, like I don't know if I ever even go to California as an adult. It's like I feel like if you didn't go during the pandemic, then like if you never been, it kind of is what it is, especially being in Maryland, how long of a flight that is. Only reason I end up going to California is I go up to Hawaii, and that's usually where you stop at. But it's like, how could I go to Cali? It's just so crazy there. So the state regulation in California announced Monday that will require insurers to offer coverage in wildfire-prone areas. How they gonna force they're gonna force the insurance companies that they want to insure in the state of California that you have to abide by this regulation? Okay, I guess. Ultimate goal. I remember my cousin was telling me in North Carolina, where my dad's side of the family and my mom's side of the family are from. Shout out to Rockingham, North Carolina, the Rock Richmond Raiders. One of my cousins was saying that if you were having such they have such a high theft rate of vehicles, a vehicle theft, that if you do the remote start for your car and you leave it running, whatever it is, the keys aren't in there, but your car's still running. They said insurance companies weren't covering that. It was just that high as far as car thefts. You know, somebody can fact check me on that, but that happens to insurance companies where there's in a situation where they're like, yeah, we're not gonna cover this or insure this anymore. All right. Ultimate goal of the new rules is to get homeowners out of the FAIR plan. California Insurance Commissioner Ricardo Lars' office said the average cost of insurance in the FAIR plan is about $3,200 or more than double the typical homeowner's cost. God. So they're going from a little over $100 a month to well over 200 and almost $300 a month. That's crazy. The rule will require home insurers to offer coverage in high-risk areas, something the state has never done, clearly. Insurers will have to start increasing their coverage by 5% every 2 years until they hit the equivalent of 85% of their market share. That means if an insurer writes 20 out of every 100 state policies, they need to write 17 in high-risk areas. Wow. Or like, what are they going to tell us what happens if they decide not to do this as far as the insurance companies? Because that's crazy. In exchange for increasing coverage, the state will let insurance companies pass the cost of reinsurance to California consumers. Why would the consumers want this? So think about this. As a taxpayer, you voted, or maybe some people didn't vote or did not vote for the people that are elected. But these people in office are putting in a regulation that's going to make it cost you more money. You already can't insure your home. It's already expensive to insure your home. Now they're like, yeah, okay, just go ahead and pass this cost over to the consumer. Insurance companies typically buy reinsurance to avoid huge payouts in case of a natural disaster or catastrophic loss. California is the only state that doesn't already allow the cost of reinsurance to be borne by policyholders according. Okay. So they're saying California is the only state that doesn't do what they're about to do. Opponents of the rule say that could hike premiums by 40%. Remember, this has nothing to do with property taxes that are increasing as well. It doesn't, and any other taxes that they got to pay in California. They tax them to death in California. Premiums by 40% doesn't require, so this is going to possibly increase premiums by 40% and doesn't require new policies to be written at a fast enough pace. The state did not provide a cost analysis for potential impact. Californians deserve a reliable insurance market. Sure, Californians deserve what they're getting. Not all of them, but hey. The insurance market that doesn't retreat from communities most vulnerable to wildfires and climate change. That's crazy. That is crazy. Again, though, thousands of LA homeowners were dropped by their insurers before the Palisades fires. This is by Amy Peachy and edited by Anne Marie Lee. Look, It's unfortunate to see what's going on in California, but insurance companies, I mean, if from a business decision, if that's they think it's in their best interest, I mean, they got respectfully State Farm with other things to worry about as far as other states, other people, or even other parts of California, just in general, that they insure.